More and more traders are trading currency themselves as a profit tool. If not trading it, then definitely looking at currency to get an idea of where the other markets are going. Our guest today is John Person of National Futures, going to talk to us about that. John, thanks for being here.
Tim, thanks for having me.
Well, is there an overall view of currency, or even to the U.S. dollar specifically, that you have right now?
Boy, I'll tell you what, the dollar's sure getting beaten. A lot of people think it's, headed for zero, but I have a different viewpoint. I think we're actually going to be in a longer term, 6 to 18 month time frame trading range. Seasonally speaking, though, if you look back, a lot of people may not be aware of this, so this is maybe an excellent, timely interview, because a lot of folks that are trading currencies, as you mentioned, aren't aware that there are some seasonality, supply-demand cycle fluctuations, particularly one currency, the euro currency versus the U.S. dollar. In its short history, the euro currency actually has a tendency to rally against the U.S. dollar headed into year's end. So from on or about the end of October and into November, we see the euro currency kind of bottom a little bit and then rise against the U.S. dollar. This particular year, I'm not looking for a huge advance, but I think one of the things that traders can pay attention to is after the new year, on or about the second trading day in January, the euro currency has a tendency to decline versus the U.S. dollar. And that might be more in sync or in line with my viewpoint on interest rates and where we are, and more importantly, my viewpoint that we're in a trading range for a while. So I think that there are so many different vehicles and avenues to take advantage of this. People can trade the futures, and there's also the mini futures that they can trade, the micro futures. Spot forex traders can take advantage of this, and stock traders can take advantage of trading foreign currencies via exchange traded fund, particularly the FXE. And more importantly, option traders can certainly take a look at that because the ETF is optionable. So I would say right now, look for the euro currency to rise into year's end, and on or about the second to third trading day of January, look for a decline in the euro currency for a swing trade lasting through probably mid-February.
And real briefly, what do you think is behind this seasonality of this?
A lot of multinational corporations, money flow changes, end of year money changes, and I think that that's what we've seen, that cross-currency trading scenario. Year end, people are position squaring, and then all of a sudden they readjust their books headed into the new year.
John, thanks for your time.
You're welcome, Tim.